Well, good morning, everyone. Welcome to our Tuesday morning trading room. Hold on a second here. I will get you my monitor. All right, the market's just opened, had a little bit of a pop to the upside there. For those of you new to the trading room this morning, just a real quick overview. What you're looking at here is the diversified trading system. And the way I have it set up is I have my Hawk scalper here in the top left, Falcon swing trader top right, Eagle Trend Trader bottom left, and then the Raptor on the bottom right. So the charts you're seeing on this monitor are the NASDAQ, and I'm also watching soybeans and crude oil. But I would be happy to take a look at any market which is of interest to you. Big opening gap up. Well, relative to where the market left off, let's take a look here on the Falcon. And you can see that here in the overnight, and during the Asian session, there was a nice steady progression up. The market came down, settled here on the median line, and took a little bit of a rally. So we're almost right back up to the overnight highs. And where the market left off yesterday, it would have left off down here somewhere around 44.10. I forget the exact closing price. So that, relative to where it opened over here, that's going to look very much like a big old hole. And sometimes the market does try to trade into those early gaps. So we'll keep a lookout for that. Crude oil, a little wishy-washy this morning and also potentially heading lower. Here's crude oil. You can see this is on our Hawk scalper, a lot of yellow bars through here, which tends to give me pause. I try not to trade the market if there's too many yellow bars. And it looks like we may have just violated that lower trend line there. Let's see, is it ranging in a channel? No, not really. There we go. So crude oil, our micro and macro lines have changed over, our bar colors changed over, our filter has changed over, just waiting for a signal to print. And soybeans making a little bit of a reversal. Here's soybeans on the Eagle. So soybeans have been merrily plodding along the last few days. And now today it looks like they're turning over a little bit. Technically this is a rule of three. We've had 1, 2, 3 breaks against the band. And here too, it looks as though we've broken the trend line. Haven't really seen a decent test of the extreme yet, so I might let this react a little bit, see if it comes back with another sell signal. That might be a little bit more interesting. But you can see overall rather quiet days for soybeans. This is normally what it should look like, or even a little bit larger. But this last couple of weeks in soybeans, they've been kind of on the quiet side. So let's put the soybean chart away. Let the dust settle a little. Some of that early momentum is tailing off. This might have been a nice macro pullback signal here, except this yellow bar spoiled it. Now, this is not to say, let me roll this back here so you can see. This is not to say I don't expect a rally from here. You know how I always say, oh, I don't trade yellow bars. A lot of that is for your benefit because I don't want, as you get more comfortable with your tools and as you start journaling your tools and journaling your results, you can make your own variations. But I would rather, when in doubt, I would rather that you just stick to the rules rather than fly by the seat of your pants. What makes this a little bit more attractive trade is that we haven't seen the test of the extreme here yet. Right? The test of the extreme being the high, we know that there's normally some sort of reaction before the market reverses and heads lower. So if you think there's enough room in here to profit, if you think there's enough room to hit your profit target before seeing the market reverse, then that's not a bad situation, even though it is a yellow bar. However, normally I avoid yellow bars because, well, for every yellow bar signal you show me that works out, I can probably find you one or two where it didn't. And this would probably be one of those situations where it didn't. See, it rallied a little bit, failed, and now we're working on our first micro-macro cross signal lower. Look at that. Still a little early. This is a first micro-macro cross. It tends to be a higher probability signal. I am dialing down the risk amount. See, I'm only going to dial it down to 1%, and I'm going to run my stop a whole lot deeper. And I think I'll disengage my stops for just the moment. So now you can see we're keep moving back. Now it's into a macro pullback, and now we're into yellow bars. So if that yellow bar stays, yes it does. Now we're into a green bar sell. That yellow bar did not stay very long. Now we're back into yellow bars. Give me that green bar sell. No, you're not going to? Stinkers. You know you want to. All right, well, it looks like that's going to stay in yellow bar mode. What, did I just close my chart? Where'd you go? Oh, there you are. Okay, so here's that green bar sell that we were looking at. I'm a little bit late on it now, but same thing. We know that this market will probably head lower because there isn't a test of the extreme. So I'm not looking for a huge opportunity here, but I'm looking for the market to perhaps test these lows. Now the green bar sell I tend to be pretty aggressive on. I tend to enter on the hash mark and I try to cover it a little bit above the swing. You should have a hit and run mentality for this type of trade. Oh, it looks like we might be trying another green bar sell. Like I said, this is all still very early. Not the best looking scenario. If you're looking for a high probability trade, well then I think I would definitely be on the lookout for that first micro macro cross that's going to print here eventually. Okay, we're getting an early trend change here on the Raptor. So we're printing that sell signal. It's against our band, but with the Raptor, oh darn it, don't run away here. I'm trying to make a point. Oh, there it goes. With the Raptor, we want to watch the swing points relative to the yellow bars. So the yellow bars highlight areas of interest, and then we can gauge the swing points. And you can see that this was making a little bit of a lower swing. Oh, this market very much sideways. Yeah, lots of yellow bars. Soybeans made a nice little move here in the overnight. If you happen to be living on the East Coast or in a time zone where you can watch the soybean market pre-open, here was a very good macro pullback signal and a very nice move lower well before the market opened. So we'll see if this doesn't build into some sort of consolidation pattern or perhaps another macro pullback. Early trend change signal here on the Falcon, where it was just changed over. We had that, several tests of the extreme. We had a test right here. We had a test right here, giving us a little bit more confidence to sell, but we should get a proper trend change signal out of that. By that I mean this is the segment here where the trend line changes color. We should see a little bit of a reaction, and hopefully the market come back with another sell signal, probably somewhere around there. They're confused. All right, finally getting that first micro-macro cross signal here in the NQ. You can see it originated rather deep. I probably wouldn't enter there at the moment. I'd probably give up the extra ticks to enter below here. The problem with this is where in the world do you cover this? So if they're only going to allow me a single, I'll probably throw a runner on it. Try to cover it up here. Oh, and as they retreat higher, it becomes more advantageous to try to enter early. Okay, so this is one of these signals where there's the real potential that you're going to see it fill and then retreat. So again, something that you want to run a rather deep stop on. Because a lot of times these types of signals, they're not finished yet. They need a little bit of thrashing room. And it's a quarter to the hour? Yeah, Here it is. Quarter to the hour. Let's watch this. Watch, they're going to come down. They're going to tag me. Okay, they tagged me. Now watch them head higher. I bet you anything. Go ahead, make a liar out of me. Get down here to break even. I dare you. See? Stinkers. I do believe it will go lower here. I don't necessarily believe I'm on the wrong side of this market yet. However, I could have got myself a slightly better entry by waiting for the market to finish this retracement, especially, when I know it's 6:45 or whatever your particular time zone is. See, so, well, actually, we would have been nixed on this trade because we're into yellow bars. If it goes any higher, it would have built. There we go. We're going to get another green bar sell. Here's something I haven't tried before. I don't know if Trade Manager will allow me to enter another trade while I have one going. So let's say I do that. Let's see if it allows me to place two. Nope, I'm not going to. So now you can see we're actually working on a warning dot here for a possible buy signal. That was a huge, huge move higher. This was unexpected. I thought the market would drift here to the macro pullback, give us some sort of reaction. You can see there were a couple of bars here that tried to press lower, but this is quite a bit more bullish than I anticipated. Again, probably due to the sideways nature of the market. Yeah, like Jim pointed out, Jim says the NASDAQ has a double bottom on a 30-minute chart, right around 44.17, not too far from where I got in, of course. You can see our hawk there printing more yellow bars. All that is significant because it tells us that, hey, this market really doesn't know what it's doing. Or it's perfectly happy where it is. That's probably a better way to look at it. It's perfectly content. Yeah, Jim says the DAX is strong, but the YM is weak. So again, it just goes to the choppiness across the marketplace. Here is, now we've got the Falcon actually printing a buy signal. This is our trend change signal. And again, this is kind of the market acting in sort of a goofy way, so I'm going to take steps to protect myself. This is a higher probability signal, so I'm not opposed to taking it. You need to trade what's going on the charts rather than what you think is going on the charts. So here's our entry signal. If I offer up 1, 2, 3 ticks, I can get entry above this high, which is fine by me. I'll probably use that stop strategy. And I've dialed down the risk amount because, hey, the market is a little bit crazy right now. So we'll see if we take out these highs, we should see a little bit of a shot to the upside. Okay, so we tagged the highs. Let's go. Let's get a little bit of a move on now. Oh shoot, what did I do now? Doggone it, Eric. Did I close my chart again? No, I pushed the wrong button. Oh, Eric. I did too. I closed my chart. Hold on, folks. I got to rebuild that chart. Not thinking. This is why you don't mess around with your charts when you're in a trade. Oops, where is it? Ooh, wrong account. Hold on. I'll get there. One sec. Falcon. I forgot to turn it back on. No, enabled. True Falcon. Where are you? There. All right, so we were looking at buying here, or I just bought on the other side there, so we got in something like that, more or less. The NASDAQ, the odd man out again. Now, sometimes when you're looking at these signals as well and you're not getting any follow through, that should be a clue that the market's not behaving either. So if you take a trade like we did down here and it fails, okay, well then you're thinking, okay, the market doesn't want to be sold. I'll take a look to buy. So you go in here to buy. Let's see, did it reach our profit objective? Oops. Did it reach the profit objective to the buy side? Yes, it did. So right now, the buyer's following through, the seller's not. That's what that's telling me. So even though I personally think the market is going to be heading lower today, it's the buyers that are performing. But, you know, again, all these yellow bars, when you're looking at your chart and you get all these yellow bars, I know it's difficult just to sit there and not do anything. And sometimes I show you stuff here in the trading room, but that's more because, hey, this is a trading room and we're sitting here anyway, so I might as well show you something. But, you know, trading it with your own hard-earned money, well, you got to be careful. Okay, so here we've got a swing occurring in the NASDAQ. A lot of times what I'll try to do is I'll try to hold my stops until I see that first swing. Once I get that first swing, well, now I start to get more aggressive with my stops. So I would be trailing my stop up here a little bit tighter. I would have it definitely below the swing low, take a little bit of risk out of this trade. And this is really the last chance of the buyers to get their act together. This buying that's going on here, the buying that's going on at this level right here is associated with the buying that occurred right here and that generated our buy signal. So if the buyers fail at this point, well, then it's definitely time to get out of this market. So this tends to be a place where I do tend to get a little bit more aggressive. And now we're actually generating a sell signal. You can see we're getting our warning dots, and we just generated our sell signal to the downside. This one looks a little bit more attractive now because we have failed on the upside. Oh, actually, I should be dialing down the risk on this, though, because this is still very much a sideways market. We're getting, see how this bar was turning green here for a second? We are going to get a second push on this entry, which again makes it a little bit more predictable or reliable style trade. So not a bad looking opportunity at the moment in the Falcon. But look at here, the hawk giving us a red bar buy signal. So conflicting signals between your tools, not a lot of fun. Oh yeah, Jim says, and we're up against the hard edge on the Raptor. And we are too, where we normally anticipate some sort of reaction. Yeah, and there we go. Get a little bit of a bounce to the upside. Okay, so our sell signal is not. We can scrub that. Soybeans trickling lower. Crude oil going sideways. Not much going on at the moment. Okay, now here's the red bar sell or red bar buy. This is one of our few counter trend signals. This is a signal where you can sell the failure of it. Again, not the strongest looking trade at the moment, but you see how it's failing to head higher off of this buy signal? Well, it hasn't stopped out yet, obviously, or failed, technically failed, but if it can't go higher, then there's a good chance it's going to try to go lower. Where are my stops at? They're over there. So I'm going to enable those. There we go. So the market just trying to feel its way around a little bit. Like I said, they seem to be pretty happy where they're at around this 44.30 area. Here we go. A little hit and run. Now we're coming back with our First micro macro cross signal. Oh, look at that reversal. Straight back to a macro pullback signal. Come on, get up there, get into yellow bars. Jim says the advanced decline is not all that strong this morning. It's hovering around 400 shares to the good, or 400 stocks to the good, I should say, which is borderline bullish. All right, so here's our first micro-macro cross signal. We are getting a chance for a second push on this one. Probably would risk it to there. Not a signal that's giving me a warm, fuzzy feeling, because we've got, a higher swing low. We have lower swing highs. And did we just breach the trend line there? Yes, we did. Which is also suggestive that perhaps the market will be getting a little bit stronger. All right, well, we'll leave that alone for now. Coming here with off the Eagle, another red bar buy signal. You can see the congestion building in this one also. That's what we're up against right there. Jim's giving me the play-by-play here. He says the DAX is starting to lose it, and the YM sitting on the 10 a.m. low. Okay, the hawk here is into yellow bars now, so I am going to cancel that order. So we have a 3-arrow consolidation at the moment. See, 1, 2, 3 arrows. We'll see if we get that fourth signal. All right, technically this is not a late filter entry in the way that we normally like to see it. However, it is a similar to a late filter entry. Stinker. I was going to try to show you something here. You see how it went out of sync for 2 bars? If it only goes out of sync for a couple of bars, I will still consider that to be almost as good as a late filter entry. What happened here is this bar got a tick too high and changed the trend line color. Let's see if we can grab that off something else. Nope, not at the moment. The late filter entry, of course, let me see if I can find you a pristine one so that you can see what it's supposed to look like. A very reliable signal in our Falcon tool. All right here. This is, I believe, from yesterday. The trend line does not change color. The filter does. It goes out of sync and then comes back into sync. We generate a signal. Excuse me. And as I said, very high probability signal. This would not be a late filter entry signal. Here, the trend line has gone out of sync for far too long. But you see what happened here this morning. We only went out of sync for a bar, maybe 2. We had the lower swing. There was definite selling pressure going on here. Our filter was out of sync. Everything came back into sync. You could also have read this as an early trend change signal. But at any rate, the market made a little bit of a pop to the downside. Oh, way to go, Suncombe. Suncombe says, I just had a late filter entry signal on the YM. Good for you. Richard has a question. He says, Richard, or Eric, can you please show me how to remove the vertical red and green buy and sell lines? I'm new to DTS and they crowd my charts. Yes, I will show you how to do that. So what you need to do is you need to go to your indicator window and then you highlight your tool, your Falcon Swing Trader or Hawk Scalper or whatever it is, and then go down here to the very bottom where the cosmetics are. Background opacity, yours is probably set at 2. If you set it to 0, it will turn it off. And then you can click apply and OK. And once you have your charts set up the way you like them, with your colors and whatnot, I suggest that you save it as a template. And that way, when you build a new chart for a different market, all you have to do is load the template that you've saved. And it will already come up the way you like it. All right, here we go. Another first micro macro cross signal on the Hawk. Again, right down here at the lows. Ay, chihuahua. This is one that I would definitely want to enter below the lows. Can I cover it above the highs? Yes, I can. I'm only going in for a single, so I think I'm going to put a runner on it. Oh, the stop strategy grabbed my stop already. Let's leave it up there just a little bit. Give them lots of room to sort themselves out. Took a tick slip on the entry too. Stinkers. Well, I wasn't expecting that. Really? This is a five bar swing? I don't think so. Why did Trade Manager roll my stop down there? Well, if this goes much higher, it'll save me a couple dollars, but I wasn't expecting that to roll just yet. It's bad when your first micro macro cross signals do not follow through. You know it's going to be a difficult day. I think that is the second first micro macro cross signal on the sell side that I had fail. This one failed and this one failed. Now admittedly this one is on the lows. I realize it was a difficult place to get in. Here's a green bar sell. These tend to be our weaker signals. However, I'm going to show you something here. This green bar sell, if it trips, now I can anticipate where it's going to print. What am I looking for here? Why do I believe that this green bar sell will head lower? Well, I'm looking for a test of the extreme, right? I haven't had the market test these lows before it heads higher. So that's what I'm looking for. I'm looking for a test of the lows. So I've just got the warning dot. In fact, I can tighten this up a little bit. Once again, I can anticipate where the hash mark is going to print. And I'm going to cover it above these swing highs here because it looks that's where the market is reacting. Way to go, Suncom. He says I scored 3 all-in, all-outs, 2 on the YN, 1 on the NQ. He's up $300 today. Way to go. Good job. All right. And now they're running away, so that nixes that. But look at how unusual this is, right? There has to be a move lower here, but we're just not seeing it. Stock market definitely weaker than the NASDAQ. NASDAQ being very sticky. Crude oil still fairly sideways for the most part. A little bit of an uptick, but not much. We did get a trend change signal here in our Falcon tool. And I believe that was enough to find our profit objective. No, not quite. Just a little bit shy. Enough to get the trade to break even at this point. Michelle's got a question. She says, Eric, my hawk for the NQ6 ticks looks a lot different from yours. How do I find out what version I'm using? Perhaps I'm outdated. I doubt it, Michelle, because there's never been an upgrade to the hawk. Send me a screenshot, but it may be here in the data series. The thing with these range style bars is they depend when they start counting. Now, it isn't a deal breaker if yours looks a little bit different, because it will still print the signals as it interprets them. The signals are not absolutes. That might surprise you to know, but they develop as the market conditions allow. You can see here I have mine set at 50 days and, default 24.5. If you have yours set a little bit differently, and depending how your data provider handles the data, if we're a few milliseconds off, yours might look a little bit different than mine. And yes, sometimes that's all it takes. But try loading a little bit more data. I have 50 days in here, not as a norm, but because I'm running the Day Ranger. And the Day Ranger needs at least 31 days of data to operate. So I threw in 50 just for good measure. But you can send me a screenshot of yours. Maybe yours looks better because mine is a mess. Yeah, it might surprise you to know that the DTS system has never been upgraded. There have been no changes made since its release a few years back, because there was some pretty intensive testing that went into this particular tool or tools. Oh, Jim says a lot of buyers showing up on the ticks. The ticks counting how many upticks there are on the New York Stock Exchange and how many downticks. The idea is if there's a lot of buyers, then we're going to see the stock indices rally. Unless, of course, there's too many buyers, and then all of a sudden you see the stock indices fall. All right, here we go. First micro-macro cross signal to the upside. Now, the upside has paid off. Again, first micro-macro cross signal, high probability signal. I'm going to try to cover the trade deeper here, try to give myself some staying power. And I believe I mentioned to you guys the other day that sometimes if I have a trade work one direction, I will stay with that direction for the day or until I'm proven otherwise. So we did have a buy signal workout back here. They haven't been cooperative to the downside, so we'll see. Here's another buy signal. That rule of thumb may hold true today as well. We'll see if we get a little pop to the upside now. And while we're waiting for that, Michelle is asking, Eric, what are the brick sizes that you're using on trading soybeans? The soybean market trades at $12.50 a tick, so I go to our alternate settings of 4 ticks on the Hawk, 4 ticks on the Falcon, and 6 ticks on the Eagle. You're going to find that those tools that trade at $12.50 a tick, or those instruments that trade at $12.50 a tick, the default brick size that we normally use is going to be a little bit too restrictive. Here we go, more sideways trading. All right, this is into yellow bars. We can cancel that. Look at what's going on here on our Eagle. We've got 1, 2, working on the third break against the hard edge. The band is trying to turn over. We're generating a green bar sell signal, which is interesting because these tend to be fairly reliable sell signals. By the time this prints, the market should be in a position that it might actually tail off here. Now, we do have our ATR line right down here. It's a couple of points away from the low. It's your choice whether you want to enter on the other side of the ATR, which tends to be a little bit more reliable, or try to get in early so that you can cover a little bit higher. Not, the best looking trade because we're still very much sideways. You can almost throw a line right through here and you can see how evenly balanced the market is on either side. But this is working out to be a rule of 3 type signal off of the green bar sell. The problem with these sideways markets is that until they actually break, every trade you take is, well, it's a crapshoot. It really is. It's a gamble because you don't know if it's going to go higher or if it's going to go lower. So what should you do? Well, you can either stick to your scalping tool and just try to scalp in and out for a couple of bucks, or you identify the trading range and you say, okay, I'm going to wait till it gets below the lows. I'm going to wait till it gets out above the highs. I know that's very boring, but it depends whether you're trading to make money or whether you're trading to amuse yourself, because when it breaks out here to the downside, you're going to see this type of pattern develop, where you're going to get the breakout, you're going to get the retest, and somewhere through here you're going to print a sell signal. Now, yes, it's quite a ways away from where this sell signal was potentially going to print. However, the reliability of this signal is considerably greater than the reliability of a sell signal that occurs in the middle of a sideways range. Likewise, if it broke to the upside, you would get this type of pattern developing. And somewhere through here, you're going to print a buy signal. Now, with these larger trading ranges, occasionally you will get this little telltale pattern develop somewhere near the top of the trading range. That's pretty good too. Or conversely, it might develop just at the bottom of the trading range, something like that. But the best ones are these big ones that actually take you outside of the range. There will be a retest if the market fails to get back into the range. Then you can have some confidence in selling. But that's where we're at right now. We're sideways. So if you want to amuse yourself, you can certainly go into sim mode and treat it like a video game. But if you're trading with real money, really the best thing to do is just try to sit on your hands for a little bit. And since we don't have much going on, a great opportunity to answer Craig's question. Craig asks, Eric, I would like to set up the trade manager to sell half of my position and leave on a runner for the second target. How do I do that? Well, it's not too difficult, Craig. Down here on your trade manager portion, you can set your targets, but you need to set them as a percentage. So T1, T2, T3, you can set up to 3 profit targets, and you set them as a percentage of your total position. So if you want to take half off on target 1, you would make that 50%. And then you preset your target. Oh, stop it. And voila, it automatically defaults to 50% on target and 50% on as a runner. So if we're taking this signal here, oh, I can only take one. Let's set it up like this. You can see it's going to peel off half my position. I can trade 2 contracts. It will take half my position at this target and leave the remainder on as a runner. Yeah, it's all done down here with these T1, T2, T3 target presets. So here was the first micro macro cross. Did that hit target? No, it didn't. Oh, look at that, folks. Now, what is that now? 3 first micro macro cross signals that failed to reach their profit target? Oh, man, that is reason enough to not trade today. Just taking a look, make sure I haven't missed anyone's question. If I did, no, I think I got everybody. If I did, then please repost it. Yeah, Jim says the NQ is the strongest. I was just looking at that, Jim. The stock indices a little bit on the weak side, but the NQ not giving it up. Not yet, anyway. Jim's watching the bank index, and that's getting a little stronger also. The idea is that the bank index helps support the market. look at this. Now they're going to test the bottom end of the range. Okay. Darn it. I wanted this green bar sell. I looked away for a moment. All right. You know what? I can probably take it below here, cover it here. Let's do it like that instead. Michelle asks, yesterday you mentioned that there's some markets you double your profit objectives on, like crude oil and soybeans. Are there any others you can think of? For instance, the DAX. Yes, the DAX is one that I double my profit objective on. Gold is one I double my profit objective on. The mid cap, that's the EMD, or if you prefer the Russell. I don't get the Russell in my data assortment, so I'll watch the mid cap. I will double my profit objective on, as I would with the Russell. And I think that's just about it as far as day trading markets are concerned. Any market that has a higher degree of volatility or that is prone to trending, I will double my profit objective. So you have a market like soybeans, which can be insanely volatile. Thank goodness they're not right now, but soybeans do trend well. Once they pick a direction, they're not always fast to get there, but they do tend to follow through. So you see here in the wee hours, as I mentioned, we had a macro pullback signal, and we're still working that macro pullback. We have comparable signals on the Falcon and the Eagle as well for soybeans. But let's take a look at here. Yesterday, here was a macro pullback signal. Again, a pre-market. Here was a, well, I want to call it a first micro-macro cross. It's not really. I guess it's just a standard signal, just a bounce off of a trend line. But same thing. Once soybeans settle on a direction, away they go. This was a macro pullback that came about a half hour into the session. So that's one reason I like soybeans. This is actually unusual. You don't normally see soybeans this choppy. This was an active day for soybeans a few days ago. But again, you can see good follow through on the signals. First micro macro cross signal coincided with the failure of the red bar buy. Nice move lower. Move up, first micro macro cross signal. A little bit of a pop to the upside, macro pullback signal, a little bit of a move higher. So here, you know, these are markets that I do tend to be a lot more aggressive with my profit target. Actually, I could have been a lot more aggressive than that still on that move. Of course, if you always want to stay with your highest probability objectives, then, you know, if you're trading crude oil for on your Falcon for a $100 target, you're almost guaranteed you're going to see that $100 target every single time. Oh, Michelle says soybeans are making a trend line crossover. Yeah, possible trend change signal here. Nothing yet, right? It's just working on a trend change signal. And once again, I'm trying not to get too anxious on the buy side because which direction is this market going at the moment? And if you don't know yourself, see if you can find an 8-year-old and ask them, which way is this going? Is it going up or down? They'll tell you it's going down. unlike the NQ at the moment, which is still stuck sideways. Yeah, Mark says it looks more down to sideways on the soybean chart here. Here's the easy way that you can tell. This is Eric's law of trend lines, or Eric's law of trend. If the prices start in the lower left and go to the upper right, you are in an uptrend. If prices start in the upper left and go to the lower right, you are in a downtrend. If you have more than two of these on your chart, you have no trend. So knowing what you know now, which way is that going? It's going down. That's not to say we won't see a little bit of a move to the upside here, but if you want to stay with the trend, this is down. So if we're getting, let's fast forward this a little bit and let us pretend that, you know, we're generating a trend change signal. So we get our little characteristic up, down, up pattern. The market comes back, and now all of a sudden we're printing a buy signal right here. All right, what do? The market is technically in a downtrend, but we're generating a buy signal. Should we avoid the buy signal? It's a high probability buy signal, according to the Falcon, right? The trend change signal is one of these signals that we favor, we look for. Well, because it is against the trend, I would try to protect myself. I would dial down my risk amount for starters. So I would probably go with 1%. I would, if it's this close to the swing high, I would probably give it up another tick and enter above the swing high. And I would try to enter exit way below the swing low here. Now, Trade Manager says, sorry, Eric, at 1% you can't do that. So let's see, what's it going to cost if I do it at 2%? So I'm going to enter up there, covered down here. It's going to be just shy of $300. If that looks palatable to me, I can just throw the order in. And if the market continues to rally, well then fantastic, I'm in the trade. And now I can take steps to manage the trade. So let's say the market goes up a little bit and then starts coming down, which it tends to do. And let's say it makes a little bit of a swing here near the low and then starts going up again. Now, having my stop down here, once I see this kind of activity, well, now I'm going to roll my stop right here. And I'm going to continue to roll it as the market goes higher. Because if the market does not follow through at this point now, let's say it goes up a little bit and then it starts to turn again, chances are very good it's going to turn and perhaps even threaten my stops all the way down here. Now the choice is yours. You know, ultimately it is your money. You can wait and see whether the market will hold the support here, but what is likely to happen is you're going to get a little bit of a bounce and then the market's going to do one of these. So where you could have been stopped out here perhaps for, I don't know, it looks like maybe about $125, $150 loss, you would end up eating the whole 300. But if the market did follow through here, well then it's going to just keep going higher. Oops. wrong button. It's just going to keep going higher, and then you may as well try to get your trade to break even as soon as possible, in which case I would be, following the market higher, at least so I could get it to break even. And once it's at break even, well, it's either going to go, there might be a couple little hesitations in here, but it should eventually continue up to hit my profit target. So I can either continue to roll it manually or engage one of the stop strategies. But this happens time and again. That's why I can draw it out like this. It doesn't look all that unreasonable, does it? Because this happens over and over and over again. See, so where's the decision point in this marketplace? The decision point occurred right here. After the buyers came back, there's a little bit of a push, and all of a sudden, this is the decision point. Is it going to go higher? Is it going to go lower? That's why I start rolling my stop up. Because if it's going to go lower, well, I may as well get stopped out, take whatever it is, a $70 or $80 loss, and look for the next opportunity. Or perhaps even reverse on myself. There may be a trend change signal to the downside, or perhaps an early trend change signal here to the downside, an opportunity to end up selling. And whereas instead of waiting to take a full $300 hit, I can take a smaller hit, maybe reverse the trade, maybe even make some profit before the market encounters another decision point. And you learn these things by watching the charts. You learn these things by journaling your trades. So here we are. We're actually working on that possible trend change signal right now, right? We've got the up portion. Here comes the down portion. We'll see whether or not they come back with another up portion. All right, Craig's saying, can you pull up a crude oil chart? He says, I reloaded the data, but it doesn't seem to be moving. Yeah, crude oil very slow today. I haven't seen a lot of ticks there either. A little bit of a gap up here to the 56, 85, 86 area. Tomorrow's inventory report is probably going to be huge. It almost appears as though they're jockeying for position already. Is May our front month? Let me double check. Maybe it is, maybe I need to be rolling into the next contract. Where are you, crude? Oh, that's why too. Yes. We need to be in the June contract in crude, not May. It's rolling over. So let me make that change right now. Oh no, I'm in June. What am I doing? I didn't. Stupid. I loaded the June contract and I didn't put it on my chart. Here we go, that's better. Hate it when that happens. All right, here we go. Another first micro macro cross, and Jim, I'll save you some typing. Jim's going to write, Eric, they're at the 10 a.m. lows. I know. Why is that significant, you say? Well, this is Jim's handy dandy little first hour high low tool, which you can download from the NinjaTrader website if you don't have it already, or you can write me and I will forward you a copy. This is just an indicator that Jim did to highlight the first hour's high and low. The reason, and remarkably, it's amazing how many times the market will respect that first hour's range. See, look at this here. Yesterday, got outside of the range, found some support on it, came back with a buy signal, never looked back. Here's the other day. This is actually a little unusual that it broke outside of that range. What was going on that day that there was so much going on? Huge move to the downside after, again, violating the range. But very often it is a day like today where the market keeps bouncing off of the bottom end of the range. You might see it run up, test the top end of the range. I don't believe it will. That's just my opinion. But it does deserve some respect, to be sure. Boy, if things don't shake up soon, though. Then we might as well pack it in. All right, so I'm just going to try this first micro macro cross just because it is a first micro macro cross. I'm going to adjust my entry somewhat. I'm still going to try to cover above there. And I'm in for a single, so I'm going to just leave a runner on there. See if it actually builds into anything. Remember, once it gets down the bottom end of this trading range, it will have some room to run. But what is it we're looking for, class? When it gets down below here, what's it going to do? It's going to do one of those. Right? And somewhere through here, we should generate another sell signal. So chances are pretty good you don't need to worry about being too anxious here. Certainly between all our trading tools, something should follow through. Just very, very slow. Oh, Mark's made a mess of his chart. Okay. Mark says, Eric, I seem to have gotten my chart on the hawk all out of whack. Okay, let's go to the hawk. Here we go. And he says, by moving the bars from left to right on the bottom, they are now too skinny. Is there an easy way to bring them back to normal? Okay, so you move them from left to right at the bottom of the chart. Okay, the only way I know to make them fatter or skinnier is by holding your control key and hitting your up or down button, the up-down arrows. Alternatively, you can hold the Alt key and again move them, up or down, and it will change the appearance of your bar. It will make the bar fatter or thinner, but that's the only way I know of to do that. The other thing you can do, if you really get yourself in a jam, is just close your DTS, go to your control panel, and close your workspace. And then when it asks you whether you want to save your workspace, answer no. Now, here's a little tip for you. I just found this out myself. The only time you want to save your workspace is if you make a significant change to it. So for instance, when you move to a new contract month or you've added a new market or something, this is not like saving your work on a word processor. Ben, the support guy at Indicator Warehouse, actually told me that it is very easy to corrupt your files if you save your workspace every time you close NinjaTrader. So the only time he suggests that you save your workspace is, like I said, if you've made a significant change, if you're trading a new market or you've changed contract months or something of that nature. So I guess what I'm saying, Mark, is if holding the control key and moving the up-down arrows doesn't fix the problem for you, or using the Alt key and moving the up-down arrows doesn't fix the appearance, then close it up, do not save, and reload it, and you should go back to how it was before you started fidgeting with it. I don't think you can actually change the appearance from the indicator panel. Hawk Scalper. I don't think we can do anything with the bars here. No, other than change the color. Oh, good. Mark says the control and the alt keys worked. Mike is asking if I paper trade the 11 to 2014 contract, is the contract month 11 or 12? Okay, I'm not quite sure I understand your question. Nothing you should be trading should be 2014, but here I'll show you an easy way to update your contract month. If you go here to your instrument manager and you find, say, crude oil, and you click over, it will automatically default to the current contract month, and then you just click back and you'll have the most recent crude oil contract. Let's see, where's one that I haven't done? Let's say feeder cattle. So I go over, oh, see, feeder cattle is now August. It's flipped over to 8. So I click back, and now I've got August feeder cattle loaded. Here's live cattle. That'll be different too. It's in June, so I should be watching June cattle. Natural gas, have they rolled yet? Nope, not yet. Here's silver. Silver might be due. Nope, not yet. So that's an easy way to roll to the most recent contract month. Normally what you're looking for is you're looking for the front month. In most cases, commodities trade in quarterly cycles. So the stock indices, a lot of them will be like March, June, September, December type thing. That will be true for a lot of the grain markets also. Some markets like crude oil are extra active and they have a monthly cycle, and you always want to be trading the most recent one. The problem with crude oil is the most recent one is usually 2 months out. Oh, when you're back testing. Micah says when I'm back testing. Well, it's hard to say for sure, Micah, but the contract month, I believe they normally have the month, day, year format. So in that case, I would say the first set of digits will be the month. Well, the NQ still very, very sideways. Hasn't gone anywhere today at all. Oh, here comes soybeans, exactly with our trend change signal as predicted. So you see we've got our warning dots. They're going to print the signal here near the high. So for the sake of a couple of ticks, I would enter above there. I would cover down there. All right, so there's the signal. So you guys are going to think I'm psychic. Psychotic maybe, but not psychic. We'll see now whether they make the little burst to the upside. Then they're going to come down, retest the lows. We'll start rolling our stop. Go with a more aggressive stop strategy, perhaps bar high-low or parabolics, something like that. Okay, so there they go. They engage the order. I should have left my lines up here, see how closely it actually follows it. That would have been pretty cool. Now, of course you can always wait if you anticipate that the market's going to come down here, give you a bounce, perhaps head a little higher, and then, reach this decision point where it's going to either continue to plod along higher or reverse and head lower. You could wait for an opportunity to enter around here after you get this reactionary move. The only problem with that is it doesn't always happen this way. Like this reactionary move might be slight. It may only come down to here and then start trading higher, and then the market won't let you in at the better price. The market should always reward early buyers and sellers. And by that I mean that if this market makes a deep retracement, if it makes a really deep retracement, then it's penalizing us for getting in early, right? Because it's actually offering up soybeans at a better price than it enabled us to buy at. The market doesn't normally do that. It will normally, a normal market, I'm using air quotes, normal market will reward the early buyers or sellers by not offering it up at as good a price, which is why you get, this kind of formation, this whole test-retest scenario. Okay, so far soybean trade working out not too bad. I see I don't have my auto break even going on this one. I should, but we'll just watch it as it gets up here closer to around 978. I'll force the trade to break even, and we might even see where our stops are at right now. I'm holding my stop just in anticipation of that possible swing. However, there's never anything wrong with taking a look at what you have in open profit or loss for that matter, and just choosing to either grab the profit or stop the bleeding, either or, whatever the case may be. Kerry is asking about the ultimate support and resistance suite. He says, what settings do you have for your ultimate support and resistance suite? They look more like bands than lines. It's here, if you go to your indicator and you go to your ultimate support and resistance suite, and you go down here to the very bottom to the cosmetics, you can change the zone height and the opacity. It's more prevalent on a market like soybeans, I guess, just because the way the chart is building. The zones are a little bit more pronounced than they would be on the NASDAQ chart. But this is where you can change it. So currently the zone height is set at 2. If you want to see more of the zone, you can increase the number. If you want to see less, you can decrease the number. But that's that fuzzy zone that you get around the lines. That was Adam's idea. All right, so here comes that reaction now. So we should see soybean prices head a little bit lower. And then when we see the buyers pick it up again, then I'm going to become more aggressive with my stop. Soybeans, one of these legendary markets like pork bellies that can, well, that does make or break people. We'll hang with the trade for a little bit, but if things don't liven up. I think we're going to close up the room a little bit early today. Tomorrow is our open house day. Yeah. The NASDAQ market definitely in sideways mode today. Even crude oil, very, very sideways. Pretty good day to sleep in, actually. Well, for me, being on the coast, on the West Coast. All right, you guys, if you're watching the soybean trade, you know what to expect. You know what to do. If you're trading the stock indices this afternoon, darn it, I would have bet you dollars to donuts that the NASDAQ was going to get into that opening range gap, but not yet. They're still holding tough. I do still favor the downside ever so slightly for the NQ. The stock indices definitely more on the bearish side. And crude oil, I think they're just waffling until tomorrow's inventory. So I'd probably stay away from crude. All right, you guys, I'll see you tomorrow morning in the public trading room. Remember, it's at the alternate venue. And hopefully the markets will be a little bit more cooperative for us tomorrow. We'll talk to you later. Bye for now.